Hello, all. Thanks so much for joining us today. We're going to have a great set of presentations here. We're going to go really quickly through everybody. We are going to have time for questions at the end. So thanks again for joining us. We're going to go ahead and start with Dave Pitts from the Farm Service Agency.
Okay, good. Annie, thank you for hosting this rapid fire financing webinar. It gives me the opportunity to talk a little bit about the USDA Farm Service Agency and the programs that we deliver throughout Montana and the U.S. As Andy indicated, my name is Dave Pitts. I'm the director of the loan program with Farm Service Agency. I've been working for roughly 28 years assisting producers meet their financial goals in obtaining loans with FSA to start them in an agricultural enterprise. So today I'd like to talk to you a little bit about our loan programs that we deliver. The general mission of the agency has not changed for many years. We've actually been financing farms and ranches since the 1930s. We have received a number of different programs. We've had different areas that we concentrate our efforts on. But right now, Farm Service Agency is looking at being the lender of first opportunity. And what that really means is the people that are looking at starting farming and ranching or producers that may have had some financial setbacks, we want them to come to us so we can help deliver the loan programs that will assist them in their farming operation. So today what I'd really like to talk about is our programs, some of our eligibility requirements, and where people can get assistance from Farm Service Agency. So the first slide that we have right now talks about our direct loan program and our guaranteed loan program. In general, our direct loan program is one where the applicant meets with our local loan officers and works up their loan request. The funds are allocated from the government on an annual basis, and a U.S. Treasury check is issued at the time of loan closing. Our direct programs consist of farm ownership loans, farm operating loans, emergency loans, as well as youth loans. Our guaranteed loan program covers pretty much the same loans, providing assistance for farm ownership as well as operating, but we also look at conservation loans under the guaranteed program. So going to our next slide, what really is a farm ownership loan? Farm ownership loans are ones that can be used to purchase or enlarge a farm or ranch, can be used for construction purposes, to build buildings. It can also be used for soil and water uses. Primarily our FO program is broke up into about 3 different loans. One is our regular farm ownership loan program, which has a maximum amount of loan assistance of $300,000. We can provide 100% of the financing for an operation, and we can provide that loan for up to 40 years. We also participate with other financial institutions in joint financing, where FSA can again participate in up to about a $300,000 loan. We can finance that at 2.5% interest for up to 40 years. And we have a beginning farmer down payment loan program as well, where we will provide financing for up to 20 years at 1.5% interest. We would provide up to 45% of the purchase price not to exceed $300,000. The applicants do have to come up with a 5% down themselves, and the balance of the financing can either be through commercial credit or even through a seller on a contract basis. I mentioned beginning farmer and rancher, and just to let people know that the definition that we have for a beginning farmer and rancher is somebody that has not been actively engaged in farming or ranching for more than 10 years. So if it's somebody that is just starting out, they meet that requirement, they haven't filed a Schedule F for more than 10 years, they would be eligible as long as they don't own more than 30% of the average farm in the county that they're going to be operating, as well as meeting all of our other loan eligibility requirements. The next type of direct funding that we can provide is our farm operating loans. Farm operating loans are ones that provide capital for people to expand their operation or purchase machinery and equipment, livestock, and can use some of those funds for small repairs on real estate. The maximum amount of loan request for a farm operating loan is also $300,000, and the terms are typically, if it's a term loan, it's 7 years or less, depending on the security value of the property. And we also look at the opportunity to assist with people's annual operating needs, where we actually finance the seed, the fertilizer, the chemicals in order to put a crop in for that calendar year. Under our farm operating loans, we do have a new program that just came out in 2013 called the microloan program. The benefits of the microloan program are, one is that we're actually looking at operations that have maybe a little less experience, operators that maybe were not born or raised on a farm or ranch and maybe have a little bit less experience than maybe some other applicants, and it's a smaller dollar amount. And the other nice thing about the microloan program is that there's a little less paperwork involved too. Like most lenders, there is a little bit of paperwork involved in obtaining an application from an applicant, and we don't want to make it burdensome by any means, but I will say that the microloan program is much easier as far as the amount of paperwork necessary in order to process a loan. Microloans are also available to beginning farmers and ranchers, as well as veteran farmers. Let's see. Wanted to cover just a little bit with regards to our general eligibility requirements for our direct loans. And if somebody is interested in applying, our loans are provided to people who are considered a family-size farm. That means that they do not have large farm operations. We typically will not finance large corporations who don't need our credit. And speaking of credit, the applicants do have to have satisfactory credit history for meeting the repayment requirements of the loan. And so what we look at is we will obtain a credit report in processing the loan request. We don't go on any credit scores in making our loan decision. We look to see that the applicants have met their credit requirements as noted by how they have repaid their other creditors. We're also looking at the applicant having the managerial ability to carry through with the loan, and that can be a combination of education, on-the-job training, or actual farm and ranch experience. When we're looking at eligibility for our farm ownership loans, there is a little bit more restriction with regards to that. We do want to see where our applicants do have some history, at least 3 years of farming or ranching experience in order to be eligible. We want a little track history to go on in making a long-term loan. The other requirement, as I noted, the interest rates that the Farm Service Agency provides are substantially less than what commercial creditors would be providing, as well as the terms are longer. So one of the things that Congress has required of Farm Service Agency is that we can't compete with other financial institutions for an applicant's credit. So we will evaluate the financial characteristics of the applicant to see if other financing might be available, and if so, we would ask that applicant to secure financing at another financial institution, maybe through a guaranteed loan. But if financing is available elsewhere, we would ask that they do that. Applicants also cannot be delinquent on federal debt, and cannot have caused a loss to the government. Wanted to touch on our guaranteed loan program a little bit. The guarantee program is one where we actually, the applicant is working with a commercial lender in order to get financing. The limits with regards to our guarantee, we can look at a loan up to $1.392 million, and that can be for a combination of farm operating, farm ownership, or conservation loans. Now it's up to the applicant in order to negotiate the interest rates and repayment terms with that lender. Typically lenders, even though we can go out for 40 years on a guaranteed FO, typically lenders are only looking at going out a maximum 20 to 25 years. But it is the applicant and the lender that get together and put their loan package together. The thing that the guarantee does is that the government can guarantee up to 90 to 95% of any loss that the lender may incur. And with that, the lender can sell those loans in the secondary market. But what it does, it makes the lenders more willing to take maybe a little bit more of a higher risk loan request as long as the government is backing the paper. So those are really kind of the loan programs in a nutshell that Farm Service Agency administers. And we are located throughout Montana. We have 13 locations throughout the state. We have phone numbers that I think Annie is going to be able to provide you with this on this map here. Should you want to make a loan request, please contact the office that services that jurisdiction and talk to them about what your needs are and find out if FSA can assist you with your loans. So thank you, Annie. And if there's any questions now, I would certainly take them.
Great. Thanks, Dave. No questions up yet, but we will hold on to them till the end. And I know Dave might need to step off. So if you're listening and you have a question for Dave, we can certainly direct you with him, connect you with him after the webinar if needed. So thanks so much, Dave. That was great.
Thank you.
Next, we are going to switch to Wendy Knopp with the Northwest Farm Credit Services.
Me?
All right, we can hear you.
Okay, great. So thank you, and like Dave said, thanks Annie for hosting. It really does allow us to share with the folks that are listening in information, in our particular case, information about Northwest Farm Credit Services. So my name is Wendy Knopp. I'm Vice President of Ag Vision. Ag Vision is our program for young and beginning producers that we've had here since 2001, where we actually have a focus on young and beginning producers. So if you're not familiar with Farm Credit, we are part of the Farm Credit system. In other words, we're nationwide. You could be in any state and there would be a Farm Credit Association there for you. We're called Northwest Farm Credit. Our territory is Washington, Oregon, Idaho, Montana, and Alaska. We're a farmer-owned lending cooperative, and what that means is our customers, our borrowers, they own us. They're part of the cooperative, so you actually have stock at Northwest, and that allows you opportunities to vote. That our directors, our board of directors, are our customers. Our local advisors are our customers. So we have a little over 600 employees, and we have 46 branch offices. We provide over $10 billion in lending to over 13,000 farmers and ranchers. We finance about 32% of all the gross ag income in those 5 states. And we also are the leading crop insurance provider in the Northwest. Here's a map of our locations, and if you have focus there on Montana, you'll see that we have about 11 or 12 branch offices in each state. We do have a branch office in Missoula, for those of you that are listening in here in Missoula. And then our headquarters is actually up here in Spokane, Washington. We're a financial lender institution, so we have loan programs. Like Dave mentioned, for the Farm Service Agency, we have real estate loans, we have operating expenses, livestock and equipment, we can refinance debt. We also, in addition to that crop insurance, we also provide leasing services. We have life and mortgage and disability insurance as well. What I really wanted to talk to you about today, though, is our Ag Vision program. And in 2001, we started a program called Ag Vision that was really focused on our young and beginning and small producers. And so you can see there that our young producers means you're 35 years of age or younger. A beginning producer is 10 years or less ag experience. And when we talk about 10 years or less of ag experience, it's when did you start taking on the risk? Because a lot of you, I'm sure, have been on the farm since you grew up on the farm. But when we look at a beginning farmer as when did you start taking on the risk or the management of a farm? And then a small producer is you have gross ag sales of less than 250,000 a year. So to be in the Ag Vision program, you just have to qualify one of those three ways, not all three of them, just one of those ways. And what does that mean? It means that we're using a little different underwriting standards when we're trying to make you a loan. So just as an example, if you were looking at a real estate purchase and you walked into a branch office and said, I want a real estate purchase, and they were talking about down payment, you might have to do 30-35% down if you weren't in the Ag Vision program. With the Ag Vision program, we're looking more at that 15 to 20% down payment, so it does make quite a bit of difference. And then just some of the other ratios that we look at, like debt to asset and some of those other ratios we look at in order to make a loan decision are much less restrictive. There's no minimum or maximum loan amounts. We have the ability through the program to waive our fees. So if we have loan origination fees, we can waive those through the program. If you're doing a real estate loan and we need to have that appraisal done, we can waive part of that or all of that appraisal fee as well. In the Ag Vision program, we're really focusing on education and technology. And so one of the benefits of being in Ag Vision is we put a conference on, a 3-day conference here in Spokane. You have to pay for your way to Spokane, but once you're here, we pay for your food, we pay for your lodging. And we bring in keynote speakers that talk about like the global economy of ag. We talk about good family communications, personal finance, all those things that are so important for you. But also it allows you the ability to network with 80 plus other young and beginning producers as well. So that conference is a really big deal for us here in our Ag Vision program. And then the other benefit that we have is what we call our reimbursement. So once you're in the program, we send you out 3 vouchers. All 3 are worth $500. We can reimburse you for a technology purchase up to $500. So if you go buy an iPad, a printer, a computer, an iPhone, a GPS, something technology related that will help you in your operation, we can reimburse you up to $500. The other voucher, $500, is towards any type of education expenses. So maybe you're still in school and you need some book money, there's $500 for that. Or you're attending a conference where there's a registration fee, get reimbursed. That gas, food, travel expenses, again, we can reimburse up to $500 for any education type related expenses. And then the third $500 is Farm Credit offers about 30 or 40 workshops a year for our customers. Almost all of those are free for you to attend, but there are 2 that there is a cost to attend, and that $500 goes towards one of those 2 conferences should you decide to attend those where there is a fee. So that is our Ag Vision program, and in 2014, we kicked off another program called Jumpstart. Now, you still have to be in Ag Vision, so it's the same eligibility criteria as you have to be either young or beginning or small. But what the Jumpstart loans are, our customers can borrow up to $1,000. $100,000, and those can be used for down payment expenses, annual operating expenses, capital purchases, those type of deals. And we've changed the structure of this. It's interest-only payments for 5 years, and then the loan matures. And at the end of that 5 years, you either pay it in full, or it gets refinanced into a more conventional loan if your business has been successful. And so what the Jumpstart loan is looking for is those truly startup operations. You need to have a solid business plan. Your operation is truly in the startup phase. And again, you have to be eligible for Ag Vision, meaning young, beginning, and small. And we go really by the business plan in making our loan decision with this Jumpstart versus looking at ratios. And so we know going into this program, this is for the folks that maybe could not have qualified even for our Ag Vision, even with the reduced or less restrictive underwriting criteria. We couldn't make you a loan that way, but we saw a really solid business plan from you, and we just knew if you were just given a shot, you could make this work. And so that is Jumpstart program. And actually, Dave, just as an FYI for you, we have made 2 Jumpstart loans now this past year, where this $100,000 was part of the down payment program when we partnered with the Farm Service Agency. So it is a good another opportunity for those startup beginning producers. And then the last thing I want to point out here is our RateWise program. This is something we also started in 2014. Again, we're really encouraging ongoing education for our young and beginning producers. And we wanted to find a way to reward you. Again, you had the $500 reimbursement, but another way to reward you when you are out there taking these classes, you're listening to these webinars, that Annie's putting on, your grain growers or cattlemen, all these associations have all these wonderful conferences for you to attend. And obviously, I mentioned that Farm Credit has our own workshop, so we're rewarding you for attending, ours as well. And so what you do is you attend these conferences and you send us the information that shows that you attended, and you are accumulating, quote, credits as you attend these, and you're building up these credits. And if you earn 10 credits, then with a new loan, we can reduce your interest rate by 25 basis points. In other words, if the interest rate was 5%, and you had a 25 basis point reduction, that would be 4.75% interest rate. So you get this interest rate reduction for 3 years. So 10 credits is 25 basis points reduction. 20 credits is 50 basis point reduction, and 30 RateWise credits is 75 basis point reduction for 3 years. And so we just had a customer last week that had earned 30 RateWise credits, and so we were able to, we renewed an operating loan for him, and so he got 75 basis point reduction for this operating loan. As long as we renew it every year for the next 3 years, he'll have that interest rate reduction. So again, we are very excited about this new program called RateWise. Again, you still have to be qualify for Ag Vision, young, beginning, small producers. But we think this is a great way to reward you guys for your continuing management education. One last screen here. Oh, sorry about that. One last screen here that I wanted to point out is you can walk into any branch there in Montana. Everyone has the ability to make Ag Vision loans in all of our branches, but we have designated folks in Montana that specialize in Ag Vision, the Jumpstart, the RateWise, and so I put their contact information up here as well. And so if you're in any, if you're closer to the Great Falls, Miles City, or Billings branch, these are the folks that you want to reach out to. Again, you could always walk into, we'll say, for instance, Missoula, and they're very familiar with Ag Vision. They're just not as focused, specialized on Ag Vision as these other 3 locations. So, Amy, with that, I'll take any questions or wait till the end.
All right, wonderful. Thanks so much, Wendy. That was great. All right, next up we're going to have Eric Suffridge with the Natural Resources Conservation Service. And I am going to switch the screen to you, Eric.
All right, good afternoon. Now, can you see my slide there?
I can, thanks.
Okay, great. Everything's working right. Again, like everyone else has said, thank you to Annie for putting this together, and thank you for the other panelists for participating, and to anyone who has chosen to participate. Let's see. My name is Eric Suffrage. Contact information there is at the bottom of this slide. I am the Assistant State Conservationist for Programs for the Natural Resources Conservation Service here in Montana. I'm in the state office, and we're located in Bozeman. We do have field offices in almost every county in the state, and those counties that don't have an office do have an office designated to service those. An example in your area would be Missoula County and Mineral County. Our office in Missoula County is there in Missoula. We do not have an office in Mineral County, but if we have a request for assistance there, our staff from Missoula will go over there. Basically, we have NRCS has two types of conservation programs that are funded through every 5 to 6 years by the Farm Bill reauthorizations. These are easements and then financial assistance programs. I'm not going to talk much about easements. That's a whole nother lecture on it in itself. Basically, these are conservation easements. The restrictions placed upon the easement when you sell those rights vary and depend upon the which easement program you're participating in. There is I put the information for our easement program specialist here in Montana. She's also located here in Bozeman, and there's her contact information if you need additional information. For the financial assistance programs, these are basically cost share assistance programs to provide financial support to agricultural producers. Jeannie Lasort there, her contact information is the financial assistance programs specialist here in the state office. But again, and I'll get into this in a little while, but our first point of contact is that local office because they have more knowledge about what's going on in that county and in their area specifically. So we'll get to that in a little bit. Funding, as I said before, the primary program I'm going to focus on is the Environmental Quality Incentives Program. We refer to it as EQIP. We're a government agency, so we love acronyms, and this one happens to work out pretty well, EQIP. It is a cost share assistance program. This is kind of a working definition to provide financial support to agricultural producers for improving the resources on their agricultural lands. The EQIP process basically consists of submitting an application. NRCS local office will work with the applicant to develop a conservation plan. The application will be evaluated and eligibility determinations will be made. Then it will go through a ranking process, and that's based on the conservation benefits of the proposed projects within that application. And it is usually a competitive process. We always have more applications than we have funding for. So there is a process that the agency goes through to develop a ranking system. Then we make funding decisions, we contract, and once that contract is in place, then the participant is able to begin implementing whatever those practices were that we contracted. So what's available? Currently, we have a couple of initiatives that might interest folks on this teleconference, and these are the Seasonal High Tunnel and the Organic Initiative. Organic is divided into certified organics and then transitioning organics, as the names imply. Depending on whether you're already certified or whether you're transitioning to organic or exempt from organic, would determine which pool of applications you would go into. There's also, if neither one of these are interest you, I know in Gallatin Valley here around Bozeman we have a lot of small operations that produce large gardens, small farms, whatever you want to call them, and for farmers markets and whatnot. So cropland, they do fall under the cropland designation, and they are eligible as well for consideration for funding. Some of the practices include high tunnels, to extend growing seasons, nutrient management, micro irrigation systems, other irrigation systems for those small farms, fencing if you're into the rangeland or grazing land, pasture, fencing, water developments are also eligible. There's a list of, I believe, approximately 87 different practices, and we have anywhere from 2 to 10 potential components under those. So our options are quite lengthy. All that will be posted on our website. Actually, it's either going in today or tomorrow or Friday. So anyway, and I have the reference for that website here coming up shortly. If you're interested in the seasonal high tunnel or the organic, we have an application period that's open right now, and it actually closes February the 20th. So when I get to that web page down here, you'll want to visit that, look for your local office, and go in there or call them and contact them and set up an appointment to go in and discuss a potential application in one of these initiatives. Eligible land is cropland, forest land, grazed rangeland. Here in Montana, cropland can be dry cropland or irrigated. EQIP is size neutral, so we can, in certain cases, have large ranches or large farms competing against the small operators, but usually we try and break them down into other scenarios or other fund codes to help make it more competitive. So anyway, as I said, local NRCS office is the place to start. There's the website. When you get to the website, if you want to look at the other programs or explore EQIP a little more in depth, there is a link at the top for programs. If you're interested in finding your local office, there's a contact us link, and so that's EQIP in a nutshell and what we've got going on right now. And I guess I'd open it up for questions.
Great.
Well, one thing I didn't mention was that on the cost share for these practices, NRCS establishes, and this is all available on the website too. NRCS establishes payment rates for those practices. So let's say if you want to come in and you want us to help pay for a high tunnel, we'd be able to tell you what payment rate we're going to pay, and then you can shop around, take our specifications and requirements, and see what's available out there. Find what you can get that high tunnel for, and then it's simple math. If it's going to cost you $10,000 and we're paying $6,000, then you're paying the $4,000 difference. So it's pretty that part of it is pretty easy. Finding some of the stuff sometimes on the websites, because we're required by law to put so many things on there. Sometimes it gets quite burdensome. In that case, the local office or myself or Jeannie would be more than happy to help find the information you're looking for.
Great. Thanks, Eric. One quick question. Who fits under the exempt from organic criteria?
That's defined by the National Organic Program, and I believe that is producers who are producing less than $5,000 per year. And I don't recall if that's $5,000 gross or how that's defined, but
okay, great. All right, well, thanks, Eric. That was great. Next up, we're going to have Lindy Davies, who is with the Montana Department of Agriculture and the Growth Through Agriculture program. So, Lindy, I am going to switch the screen over to you.
Okay. Well, thank you, Annie, for inviting me to talk about the Department of Agriculture's Growth Through Agriculture program. Montana Department of Agriculture is located in Helena, and it is a grant and loan program administered through the Department of Agriculture. There are two of us, myself, Lindy Davies, and Angie Nelson, that administer the program. I'm the GTA program specialist. So I'm going to flip through here a little bit and talk about the program began in 1987 through Montana legislature, which passed the Montana Growth Through Agriculture Act. And it is administered by a 7-member Agriculture Development Council, and then we here at the Department of Agriculture assisted in administering the program. So I see that my slideshow is advancing for me, so I guess who can apply? Private entities and organizations. These are agriculture-related entities and organizations, of course, business and industry, educational institutions, local governments, and individuals. And the types of awards, which there are what we call the Category 1 grant and loan program, which is they are all considered economic development programs, and the applicant can apply for one or both, so they're eligible for up to $150,000 in a round of funding. So we have grants available up to $50,000, loans available up to $100,000, mini grant up to $2,500, mini loan up to $5,000, so for a total of $7,500. So both programs are similar in how they're administered. They go through a competitive application review process. They all require a one-for-one dollar match. Federal funding can be used as match. Other state funding cannot. Applicants receive their awards on a reimbursement basis, and business name must be registered with the Montana Secretary of State. The deadlines for the Category 1 are set by the Agriculture Development Council, and they usually are January 30th and September 15th of each year. And for Category 2, we have a December 1st and a June 1st deadline for the mini grants, and the mini loans are on an open cycle basis. Oops. And I'm going to skip through a couple of these slides. I know we are on a time schedule, and we run that pretty tight ourselves when we have our Agriculture Development Council meetings, because oftentimes we have a large number of applicants for the council to go through. So I understand what that's about. So funds are used for what the larger Category 1 grant and loan program. So eligible purchases would be equipment, construction, consultant services, advertising and promotion, and feasibility studies. Funding is not provided for salaries, benefits, or overhead. As I said before, projects are selected through an application process. They are submitted through an online system called the Web Grant System. They need to register for a user ID and password to fill out an application, and then from there, once awarded, everything is administered through our Web Grant System. We have the Small Business Development Centers and the Food and Ag Development development network that we heavily rely on for consulting, and often will send our applicants for any questions about the application process to these centers. They are very, very beneficial, and oftentimes I have called on them to kind of help sort through a few of the things that the applicants have questions about too, because they are the experts. The council makes the decision whether it's a loan or a grant, funded, not funded, or partially funded. And if a loan, they set the terms for the loan terms, interest rates, deferment, and repayment period. Category 2 are what we call the smaller economic development funding sources, and they are mostly used for educational activities, marketing, advertising, and promotion. Mini loan usually goes for hard costs smaller pieces of equipment, construction, infrastructure costs, and the mini loan can be used for inventory and working capital, excluding payroll. For the Category 2 mini grant, the marketing staff review, these are reviewed internally. This is something that the council gave us authority to do. We found that there was a need for smaller applications and that this would be something that would fit for them. And so the marketing staff review, which includes our bureau chief and the two of us in the Growth Through Agriculture program and our other staff in our area that are in business development. And so we review them, forward our recommendations to the director, and the director makes the final decision of whether to fund, partially fund, whether to offer a mini loan award that might be a better fit. And so that is an overview of the Growth Through Agriculture program. I do have a few. I know that Annie kind of wanted a few ideas of what kinds of projects were funded, but most of them are like I had gone through before. They're for equipment purchases. We had film production, malt-analysis equipment, food processing equipment, sales and marketing analysis, lab analysis equipment, meat processing equipment, co-packing equipment, coolers. It's quite a wide variety, but most of them all are for adding value to Montana's agriculture products. So, Annie, we will have questions later, I guess.
Yep, that's great. All right, thanks so much, Lindy. That was wonderful.
Well, thank you for thank you for having me and offering me a chance to talk about the program.
No problem. Thanks so much for joining us. And just as an added note, the Department of Agriculture also does have a beginning farm and ranch loan. Walt, who facilitates that program, wasn't able to be on the call today, but they do offer funding that can be used for purchase of land, so it can be partnered with Wendy's programs at Northwest Farm Credit or with programs at the FSA to work towards the purchase of land. So if you're interested in those, definitely look the Montana Department of Agriculture up for that as well, along with several other programs. Those are all on the website. So next up, we have Ladd Barney with Rural Development. So Ladd, you're on the line, and I'm going to make you the panelist.
All right, Annie, thank you. Do you see my slide there real quick?
I do. Wonderful. Thanks so much.
All right. Thank you, Annie, and thanks for the listeners' time this afternoon. My name is Ladd Barney. I'm with USDA Rural Development. I'm a fourth-generation Montanan from the booming metropolis of Ovando, Montana. Ranching, logging community about 50 miles east of Missoula there. I've been with Rural Development for 7 years now in western Montana out of the Kalispell office. I also manage the Missoula office. We also have offices in Great Falls and Bozeman and Billings, and I'll have that last slide this afternoon. We'll have contact information for myself as well as the specialists in those offices for people to contact if they have any questions. So Annie, you know, from our trial, I bounce around from our web resources to the PowerPoint. So feel free to tell chill out if I'm getting ahead of myself. But what I wanted to do today with our short amount of time is make sure that our listeners understood where the resources were at so that they can go and do some of that self-research and even some of that self-application work without, it being business hours. Being from a ranching, logging community where I grew up, a lot of that paperwork type work is done while everybody else is either not at work or sleeping. It's that. So I want to bounce around from a couple of different resources here, but what I'd like to do is I'd like to start with just your search engine of choice and hone in on the program that I'd like to talk about today, and that is the Rural Development's Value Added Producer Grant. So in your search engine of choice, just go up to wherever it is and type in USDA Rural Development, and it should be the first link that comes up. And so Annie, you see our website or webpage there?
I do.
Okay, great. So once you're here to our home page, the easiest thing to get to the Value Added Producer Grant Program is to just go down on the left to the Grants link, and that will pull up our list of grants, and about 10 links down under our Business and Cooperative Grants Assistance is the Value Added Producer Grant. So this will launch the home page for this particular grant program. This grant program is one of 40-some programs that our offices do deploy across rural Montana, and it lives in our business programs. And once you get here, what I want to direct you to is a PowerPoint. So you can launch that and run it yourself. And I'll explain why you'll want to do that here in just a second. Anything worth doing once is worth doing 76 times, apparently. So we don't have time for 76 slides, of course. I'm going to go through just 5 of them today that hone in on what, Annie, you asked me to talk about. And so the first slide I want to go over is the purpose of the program. So the Value Added Producer Grant Program provides funds for economic planning activities and eligible working capital expenses to help agriculture producers enter into value-added activities related to processing and marketing of agriculture products, and or expand markets and increase financial returns to ag producers, and or strengthen the rural economy. So lamping forward to page 37, and I'll explain what's in the other 30 pages there in just a second. But really, the Value-Added Producer Grant falls into 2 different categories, two types. One is for planning grants, and the other is for working capital expenses. The planning grants can be used to pay a third-party professional consultant for the development of a feasibility, marketing, third-party business plan related to the processing and marketing of your value-added product. And then the other type of grant is for working capital. So let's say you already have a feasibility study in place, or you've been in business and you've been already doing this value-added production for some time. You're just seeing a huge demand to your product, and you have expenses to reach that demand. You can also apply for a working capital grant, which is used to help pay eligible project expenses related to the processing and marketing of the value-added product. So what I want to do is I want to come back to page 3 and talk about the award amounts that is eligible for each of those 2 types. So under the planning grant type, you can apply for a maximum of $75,000. Under working capital, you can apply for up to $200,000. There is a 1-to-1 matching requirement. So if you have a $75,000 planning grant application, what that means is that your project needs to be at a minimum $150,000, cost. Similarly, with working capital, a $200,000 application means that you have a $400,000 working capital need. So, and their grant, so one-to-one match. Basically every $1 of the USDA is kicking in for that project. You as an applicant, ag producer, kicks in $1. And we'll do that over a grant period of up to 36 months. It usually doesn't take that long, but it can go up to 36 months. So I want to come back to something that all applicants must demonstrate, and that is really related to the purpose of the program. What we're trying to do is we're trying to create jobs. We're trying to grow, the ag producer, trying to grow their customer base. So they must demonstrate within the application that they are increasing their market and showing a greater portion of revenue derived from this value-added process being returned back to them. Rather than somebody else doing it with their commodity product, they are controlling that process and they are getting a greater portion of the revenue from that. So I wanted to make that point real quick. I want to go and discuss real quick the ineligible uses. Very quick slide here. We cannot use these funds for purchase of land, buildings, or equipment. You can't use it to hire a grant writer. That doesn't mean you can't use a grant writer. You just can't use these funds to pay for a grant writer. You cannot use the funds for architectural or engineering design work or for the expenses that you might incur from taking your commodity product to a processing facility. This program is designed for ag producers to be adding value to their own product that they are producing. So those are the slides I want to cover here, but there are 76 slides. So what I want to make sure that the listeners are aware of is that all of those slides are important. They are very detailed. This program is designed to be comprehensive and cover just about any variable that may include a definition of an agriculture producer or the definition of a value-added process. That's what those 76 slides are for. It doesn't take very long to go through them all, but it is important to go through them because chances are you as an applicant are eligible or your process is eligible. The last thing I want to show you is coming back to our, coming back to our home page is the toolkit, the planning grant, how do I apply heading. There's a planning grant toolkit and optional application template. This is one of the more powerful tools that we have in any of our programs, and it just happens to be in this value-added producer grant program. This 45-page Word document, which would launch onto your computer, really gives you everything you need to turn in an application for, in this case, it's for a planning grant, but you saw the other toolkit there available for working capital. And so just really quickly, just one of the first pages that you come to is the checklist. And so you could use this application template as a checklist to go through and make sure that you have everything that you need. And you just check them off. And then after you've gone through the check, you understand what is required in the checklist. Pardon me. Excuse me. Then you have the template itself. And the template, kind of similar to the PowerPoint, is designed to be used by an applicant to go through and identify who they are as an eligible applicant, what their process is, and also they can use this to help score their own application. Now, we will score the application, of course, but they will understand kind of how they stack up and how they might compete based on what it is that they want to do. So the last thing I want to show you is the contact information here. So in the various offices, I mentioned Bozeman, Billings, Great Falls, Kalispell, and Missoula, and you see the contacts there. And their contact information. Annie, I understand that you will have this available on your website, and it was also recorded in the webinar.
Yep.
The notice of funding we don't have yet for this fiscal year. We anticipate that shortly. Last year it came out around this time, but that really doesn't mean anything because the year before it came out in November, I think. So that can kind of be a hit and miss. So my recommendation for anybody listening would be to keep in touch with CFAC. Keep in touch with your technical resources. We do as good a job as we can to get the word out to our partners, CFAC and MEDA and the other USDA service centers that you've got on the call today. But feel free to contact the local office also if you have any questions migrating through this fire hose of information here. So
Great.
That's all I have, Annie. Thank you.
Wonderful. Thanks so much, Lad. Appreciate it. All right. Up next, we have Tara Becken from the USDA Risk Management Agency. And Tara, I am going to switch it over to you. Are you there, Tara?
I'm here.
All right.
Can you see my screen?
I can.
All right. Well, thanks, Annie, and thanks for the invitation. I'm Tara Becken. I'm from the USDA Risk Management Agency, and our office is in Billings, Montana. Today, I'm going to talk to you about one of the programs that was enacted through the 2014 Farm Bill, and that's the Whole Farm Revenue Protection Insurance product. Whole Farm Revenue Protection provides protection for diversified farms. So what it does is it allows you to insure all of your eligible commodities under one insurance policy. If anyone was familiar with the old AGR and AGR Lite policies, this has actually changed and expanded those policies into a brand new crop insurance program. Your insurance coverage would be based on 5 consecutive tax years, and it's based on a historic average of your revenues and expenses. So your insurance is based off of your Schedule F on your tax forms, and that's how they determine how much coverage you have. You can purchase 50 to 85% coverage levels, and to be eligible for the 80 and 85% coverage levels, you have to insure 3 or more commodities that you produce on your farm. There's a premium rate discount if you have multiple crops, and no more than 30% of your operations income can come from livestock revenue. So this map shows where the Whole Farm Revenue Protection Program is available, and you'll notice that it's available in all counties in Montana. So what kind of farms can benefit from Whole Farm Revenue Protection? This product is really designed for highly diverse farms, farms producing specialty commodities, and especially people selling to direct markets and specialty markets, maybe farmers markets, really farms who want to farm identity preserved markets. And all farmers and ranchers qualify for this program. However, the way it was set up, it really is for people that are producing maybe vegetable gardens, producing products that will be sold at a farmer's market. So in order to purchase the product, what does the agent need from you? Well, the first thing you need is 5 years of farm tax forms. So that's your Schedule F. For 2015, you will need 2009 through 2013. They also need to know if you are a calendar year tax filer or a fiscal year tax filer, and what your fiscal year is. You also need to have information about what you plan to produce on your farm for the upcoming year, and that's used to complete an intended farm operation report. And there may also be some other items that they request, such as organic certification records, inventory records. It really depends on your unique operation. So what is the timeline to purchase Whole Farm Revenue Protection? Well, sales are currently open, and the last day to purchase the insurance is March 15th of 2015. So it's coming up here pretty quick. There will be some other dates that are important if you decide to purchase the insurance that come later in the year, but right now the very important thing to remember is that you have to purchase this insurance by March 15th, 2015 in order to qualify. So how do you buy the insurance? Well, we at RMA, we don't sell crop insurance. We oversee the crop insurance program. It's actually sold through individual private companies. So in order to purchase crop insurance through an agent, you can actually use our agent locator tool on our website to determine if there's an agent in your area. And the website for that is up on the screen now. And for more information, you can also visit our website, rma.usda.gov, and you can click on the Farm Bill icon where there's all kinds of information about whole farm, as well as some of the other crop insurance programs that were created through the new Farm Bill. But in terms of products for people that are maybe on a smaller scale and raising commodities for a farmer's market, this is really a great new product. There's been a lot of interest, and it's actually rated very well. So well, in fact, that we've seen a ton of interest from producers across the state. It seems to be a very affordable option for people who previously could not get crop insurance in a traditional manner. So I guess mine is pretty short and sweet. If anybody has any questions, I would certainly entertain those. And you can always go ahead and get a hold of me. My contact information was on that first slide.
Great. Thanks so much, Tara. Is that an exciting new program? All right, next up we have Russ Talmo with Defenders of Wildlife, and Russ is going to be talking about their electric fence program. So Russ, I'm going to give the screen over to you.
All right. Let's see if I can get it to pop up here. And does that show up for you guys?
Looks good.
All right. Well, again, my name is Russ Talmo with Defenders of Wildlife here in the Rockies and Plains region out of Missoula. My presentation will be slightly different than the others we've seen so far. I have lots of pictures of bears and agriculture in here. But just to tell you a little bit about what we do, one of the programs that we have essentially is to assist producers and landowners and folks who are to mitigate conflicts with wildlife and with livestock or other attractants on the property. And I lead with this photo because chickens, poultry producers, and backyard chicken hobbyists are our greatest or most common fence projects, and can't really say enough about that. There'll be a little bit more here coming. But our program, and I'll get into kind of the details of the program here, the financing part here in a second. But basically, it's for private landowners, particularly dealing with any of the wide range of issues. Again, poultry is a big one. Garbage, fruit trees, beehives, things to mitigate property damage. Again, like beehives is a big one. Livestock depredations, also very common issue. And this program essentially is centered around grizzly bear recovery and using electric fencing to deter grizzly bear conflicts. But the byproduct of that is an electric fence is very effective at deterring any number of carnivores, wolves, bears, lions, foxes, raccoons, you name it. It can be built accordingly to deter any of those critters, but it's again centered around grizzly bear issues. And our program, the way it works, we've just found that electric fencing is a very, very effective means to reduce these conflicts and to solve problems for landowners. And our organization is very much behind helping to fund that and to cost share with landowners who want to reduce conflicts on their property. And the way we do that is through our electric fence incentive program, which is essentially a cost share program that we operate all through grant funding and through donor funding through our programs. That is essentially a retroactive cost share reimbursement of 50% of the cost of any electric fence they want to build that relates to any of the things that I just mentioned, any of the attractants that I just mentioned, up to a maximum of $500. And for the average backyard, chicken hobbyist, an electric fence will cost $200 to $300. If you're, we help with a whole range of different types of fences for different projects, everything from sheep bedding grounds to cattle corrals, pig corrals, things like that. Also agricultural stuff, large garden complexes, and apiaries. I mean, those are at least the most common for this group. And I realize poultry is on a commercial scale, but also majority of the ones we do, 80% of projects we do are related to poultry and are more on the, again, just the hobby farmer kind of backyard chicken producer scale. We've been doing this since 2010, and we've done about 150 projects so far since that time. Here's just kind of a rough map of where we've done projects across the state by year. You can see a high concentration of those are around the Missoula area and the North Continental Divide ecosystem, which is up and down the Flathead and the southern part, kind of just north of us here in Missoula. And then also a great deal up in the Cabinet Yaak area as well. In addition to the funding component, the cost share part, a large part of my role is to help with any type of technical assistance or design options, materials recommendations, essentially just talk through with folks who want to participate on what would work best for them. Electric fencing is very daunting to some folks, but it's really, if I can do it, anybody can do it, and it's not rocket science. But it is a little confusing to figure out, kind of what folks need and what they think they need and what will work best for them in terms of repelling bears and other carnivores. Again, more on the chicken issue here. It's just everything from temporary ones that you can set up in 10 minutes to very elaborate backyard home chicken coops are common there. The beehives, apiaries, again, same kind of thing. Anything from permanent fences, which typically run in about $1,000 range for materials, to these temporary, more kind of again backyard style, which can go up in about an hour, and using temporary fencing, that kind of thing. Again, the sheep and cattle, we've done large landscape fences, multiple, many miles of fencing for pasture lands and things like that. Those are less common and obviously much more expensive and are a little bit outside of the scope of this program, but we have worked on several of those, and we do entertain projects like that. But again, for smaller areas, things like bedding grounds and corrals and things like that, we found permanent fencing to be a very effective option. And through our program, essentially we just found that electric fencing is just a really good option for a lot of people. It's pretty simple and inexpensive to maintain and to run, and it really just helps to minimize conflicts, depredations, and property damage, which really suits our needs and is also very much a benefit to the landowner or to the producer. And again, with the 150 projects we've done over the years, we've ended up working with a very large number of agricultural producers with pretty good success. And this is the last part. I just stick this in here for any non-believers who don't think electric fencing works real well. Hopefully this plays. You can take a look. But this is in Alaska. These are grizzly bears, obviously. And if you pay attention right, there. That's 10,000 volts of electricity to the nose of a bear, and that's about all it takes to stop them from coming into whatever it is you're looking to protect. And again, it's very effective when used properly. So that's essentially our program in a nutshell. And again, happy to entertain questions if you have anything about that. I did send Annie our application form for that program. Essentially, it's just as simple as getting in touch with me, and we can work with you through your project and help you with the cost share and the reimbursement part. And that's all I got. Great.
Thanks so much, Russ. I used your electric fencing program for my sheep, so I can vouch for it. Gotta love it. Our next our last presenter is Stacy Clary from the Sustainable Ag Research and Education Program. So Stacy, I am going to set you up as the panelist. Are you there, Stacy?
Yes, I am here.
Great.
And I'm assuming everybody can see that.
Looks good.
Good. All right. Yeah. And mine is relatively short, which is probably good since I am last. I am the communications specialist with the Western SARE, which is the Sustainable Agriculture Research and Education Program. I'm based in California. Our main office is through Utah State University, and then we've got staff in Wyoming and Montana as well. And it would be the Utah State University office where if you had questions about the grant program, you would contact, and I gave that to Annie for the website, and I'll have our website up at the end. Western SARE is the Western region of a national program, and we're a USDA program. We provide grants and education, advancing innovations in sustainable agriculture. One thing that makes us a little bit different is that the grants are for research and outreach, so we don't fund things like equipment, fencing, capacity, that kind of stuff. It's specifically for a research project. We've been around for 26 years, and we've awarded over $50 million towards projects, and the projects are cooperatively conducted by producers, ag professionals, and researchers. And then as well as providing the grants, we also have created an extensive learning center with the results from our projects along with other publications, and I'll mention a little bit more about that. So we're in 13 Western states, but also the Pacific Islands. Also, what makes us kind of unique is that, as far as grants programs, is that we believe that it's the farmer and rancher who knows best what works on his or her land. And so no matter what grants program we're conducting, a producer has to be involved with it, even if he or she doesn't take the lead. We manage 5 grant programs: research and education, farmer rancher grants, professional plus producer, the graduate student program, and professional development. I'm going to focus on the farmer and rancher for this, but if you had questions about the other ones, I could either answer them or, again, the Utah office would be able to help.
Stacy, it sounds like we may have lost sound on you.
So with the farmer rancher grant, what that means is that the project is actually led by the farmer rancher. It's the producer that submits the proposal. Oh, really?
Nope, I think you're
back.
Yep, I think you're back.
Sorry, just keep letting me know. Hello?
Hi. Yep, you sound good.
Okay, I'll try it again. Anyways, it's led by the farmer, the rancher. It's the producer that submits the proposal. Will take financial responsibility for it, and he or she works with a technical advisor, which can be an extension agent or a local ag professional. The amount of money that's available is up to $15,000 if it's one farm, or up to $30,000 if it's 3 or more farms collaborating. We don't have an open call right now, but they're always posted mid-April. And the timing is that's when the call will be posted. You'll see how to write the grant. It's an online proposal process, usually due in December. We have a review panel that looks at them in January, and then the council votes in March. So if you applied this year, you'd see funding, you'd know in March of next year, and you see the funding a month or 2 later. And again, each project has to have both a research and an outreach component. So another part of our program is we don't want research to just sit on the shelf. We want people to have access to it. So there has to be an outreach component, and for farmer rancher grants, that's usually a field day, demonstrations, a website, fact sheets, that kind of work. Annie asked to give a few examples, so here's a few, but we've actually funded quite a bit over 26 years. We had one rancher who wanted to decrease his feed costs in the winter in Nevada, had sagebrush on his land, had heard that it's possible to teach cattle to eat plants that they normally wouldn't. So his research project was to teach his cattle to eat it. He was successful. They did eat it, and it reduced his costs. And he had quite a few field days and is teaching other ranchers in the area. Someone's doing something similar with sheep grazing weeds in vineyards in California. A farmer in New Mexico wanted to cut his winter greenhouse heating costs, so he looked at solar energy. But we can also look at marketing things. We had a farmer who wanted to look at different marketing tools to increase participation in CSAs. We do focus specifically on sustainable agriculture. Our definition is that it has to be profitable, ecologically sound, and good for our communities and families. And I did want to mention this learning center, and what that means is for everybody that's ever gotten a SARE grant, they have to submit annual and final reports, and that's in a database that's completely searchable. So if you're interested in applying for a grant, you could take a look at some of the ones that have already been completed so you can see how they designed their project and what they did. But also, the database is integrated with our website that's searchable. So if you have a particular challenge on your farm or ranch, you can type in what it is you're looking for, and any applicable project will come up, but also books, multimedia, fact sheets, bulletins. It's a great resource, and I would highly recommend that to anybody that's looking for information. This is our website. Here's where the call for proposals we posted in mid-April. It's also here where you find the Learning Center that I just mentioned. You'll find the Utah State University address and phone number if you have questions. And then there's a way to sign up for our e-newsletter, and I'd recommend that. We only send it out once a month. It's very short, but that's the easiest way to be reminded when the calls are posted. So that's it, and thanks a lot.
Great. Thanks so much.
Annie? Oh, good. I thought I was talking to nobody for a minute.
Good. Good. That was great. Thank you.
Okay.
All right. We got a couple questions here, and for the questions, I'm just gonna keep myself as the presenter here, and I'll just unmute those of you who get asked a question. So to start out, Lad, I had a question for you. I'm going to unmute you here. We had a question about giving some examples of the types of projects that can be funded. What types of things can be funded by the value-added producer grant? So any examples that you have of that, and if there are any other questions out there, feel free to put them in the chat box or in the questions.
Great. Yes. Thank you, Annie. I forgot about that when you asked for that. I was prepared for it. But examples of those types of projects, we did a feasibility study for an organic, or we helped cost share a feasibility study for an organic cherry orchard there on Flathead Lake. So they were able to use the funds to contract out with a local out of Missoula research firm to provide them with the financial feasibility study for them acquiring a process plant for specifically organic cherries, which is hugely important there for some of the orchards on Flathead Lake. That was in the feasibility side. We're working with an orchard up here in the Flathead for an apple orchard, but what they want to do is they want to study the market for processing waste fruit, what typically would be waste fruit, into a highly nutritious juice that then would go to market. So we haven't completed that feasibility study yet. So we'll see how that plays out. On the working capital side, some of the listeners or presenters may be familiar with Kalispell Creamery. That's up here in the Flathead, and just seeing explosive growth with their product. And that was we provided them about $50,000, a little over $50,000 in working capital that then they used to help pay for additional labor that came from meeting the demand for their product, bottling inventory, marketing expenses for bottling, as well as additional marketing or expenses for getting their product out to the stores across Montana, especially western Montana. So those are the three that come off the top of my head.
Great. Thanks, Lad. That helps a lot. So basically, people could apply for any kind of project where they're planning to add value to a new product or develop new markets.
Right, right. So as a producer, you produce a commodity product, and this program is designed to help that producer, enter into a process where they add value to it. So it could be there's a lot of devil in the details as far as how you define that, but it could be everything from selling that commodity product locally, kind of the local know your farmer, know your food type initiative. Could be, you grow barley and so you want to create barley flakes, or you grow cherries and you want that to be organic cherries, or you want to process those for a market. So it's changing the state of that commodity product, or providing an additional market for that commodity product that you yourself as a producer control.
Great. All right. Wonderful. Thanks, Lad. The next question is for Tara. Tara, a question about when you're looking at that whole farm revenue protection program, what exactly does revenue protection mean, like as opposed to how else a program might run? So what kind of funding could they actually expect to get, and in what kinds of circumstances? Are you possibly muted on your end, Tara?
Yes, I was muted.
Oh.
Can you hear me now?
Yep, there you are.
Okay. So with the whole farm revenue protection program, what you are ensuring is your 5-year average income or revenue off of the commodities you produce on your farm. So if your revenue in a given year falls below your 5-year revenue, then you would receive an indemnity or a payment.
Great. So that's in cases of weather damage or just in any case where your revenue goes below your 5-year average.
That's right. It could be due to price fluctuations. It could be due to hail. It could be due to a drought. It has to be an insurable cause of loss, so it couldn't be something that was man-made or something that you did to the commodity. But as long as it's something that's naturally occurring, it would be covered.
You can't just burn your fields and take a year off.
That's right.
Great. All right. Thanks, Tara. Our next question is for Eric. Eric, we had a question about if you could give some examples of sort of the range of projects that can be done under EQIP. You mentioned the high tunnel, but what maybe some of the other organic initiative kinds of projects that can be done?
Okay. Yeah, the irrigation systems. If you've got an operation where you need to make improvements in your irrigation system, improve efficiency, reduce energy, those sorts of things. Let's see, nutrient management to help you with that transitioning to organic, where you're going from the potentially from commercial fertilizers to having to meet those organic requirements for nutrients. We can help with that, both technical assistance and financial assistance. And that's the thing is, we tend to focus on our programs because there's financial assistance there. We do also have, our staff are specialized, or we have, an agronomist here and there that we can provide assistance on those sorts of things. Those are the ones that come to mind, immediately.
Great. So basically the cost sharing goes to paying for kind of the capital costs of making some of these improvements. So buying trees for a windbreak, or buying pipe for changing your irrigation system, or buying drip irrigation equipment, things like that. Is that correct?
Correct. It is.
Great.
And I used the example earlier of the the $10,000 high tunnel. If a producer was able to get it for 8,000, and we were cost sharing 6, then then they're out too. So there is an advantage to shopping around. So yeah, you've got it in a nutshell there.
Great. All right. Wonderful. Thanks, Eric. All right. The next question, and this is probably our last question. We might have time for one more, but our last question is for Wendy. Wendy, we had a question, just if you could talk a little bit more about ways that your funding can be used in partnership with the Beginning Farm and Ranch Loan Program at the Department of Agriculture, or with the Farm Service Agency, kind of how those funding sources can be put together to leverage those funds and get a little more money in our pockets.
Great. We do a lot of partnerships with the Farm Service Agency. So they have their Beginning Farmer down payment program. I kind of go by the numbers 545.50, but it's their beginning down payment program. And so we partner with FSA by customer puts 5% down, the Farm Service Agency would lend 45%, and Northwest through Ag Vision would lend 50%. Sometimes the reason you need that partnership is one, you may not have the down payment that either we're looking for as on our side, or maybe FSA is looking on their side, and so the 545.50 works really well. The other reason we might want to do that partnership and not FSA do the entire thing on their own is if the total purchase price is more than $300,000, FSA has that loan limit of $300,000 direct funding. So that would be, if the purchase price was more than that, that's a great way where you need to come in and do the partnership. Through the Jumpstart program, only through the Jumpstart program, on a real estate purchase, we can be what we call in the second lien position. In other words, as a lender typically needs to be in first lien. So, we would get first to get your income on your crops, or, whatever we're taking as collateral, we'd be in the first lien position. With Jumpstart, we don't have to be that. We can be in second lien position. So with the Jumpstart program, that max is $100,000. If you need help on a down payment with a direct loan with FSA or a grant type project, then that Jumpstart program might be a way to go, because again, we can be more in a second lien position. So the partnership, I think there's a lot of opportunities. I know we've been doing it with the Farm Service Agency. I don't think we've done as many partnerships, but I'm glad I was able to be on this call, so we can start working with some of these other resources out there because we're always looking for partners to help our beginning producers. Does that answer that, Annie?
Definitely. Great. Thanks so much, Wendy. So I do have one last question. I see your question here, Matt, for Dave, and unfortunately Dave did had to step off the line a little bit early, but I'd like to see if Eric has an answer to this one. Eric, I'm not sure if you're going to be able to answer this or not, but Matt was asking whether the FSA is ever able to make conservation loans for people when they're getting an NRCS EQIP contract but need help with the upfront costs of installation. Do you ever see that, Eric? People coming in with their side of the cost share being an FSA loan? Is that something you ever see?
I believe those loan opportunities are out there, but I'm not 100% sure on that.
Okay, great. Well, Matt, I will follow up with Dave on that question, and we'll make sure we can get you an answer. And that brings us to just 1 minute past 5:30. I just want to thank everybody who took the time to be on the call. This webinar is going to be available. It has been recorded, and it'll be available online in the next week or so. I will be sending out a survey to everyone who was on the call, and if you could just take 1 minute and answer it for us, we'd really appreciate it. This webinar is funded by the USDA, and they love to hear about how we did, and we love to hear about how we did. So if you'd take a minute to answer that for us, that would be great. I'll be sending that out tomorrow. And also check out our new farm financing guide on the Community Food and Agriculture Coalition website. That's I put the link there in the chat, and I'll send it out with the recording when the recording's ready. We just put up a whole bunch of information about all these programs, and we'll be adding a few updates with some updated contact info in the next day or two. So hope that proves useful to you. And if you know of any programs that aren't on there, please do let us know, because we want to keep it as up to date as possible. So thanks again so much for joining us. Hope you've all gotten something good out of this, and we will be having our rest of our farm school series will be starting in 2 weeks on February 4th with quite a few great resources coming out, starting out with the Ask an Accountant session with a great farm and ranch accountant from Stevensville, Wade Weber, who will be here to answer any of your questions about accounting and what you need to be tracking and everything you need to know for tax season. So hope you can join us, and